The biggest trading mindset trap, part 1. You ever heard the saying, the more things change, the more they stay the same? Well, that's the harsh truth of trading psychology. Despite all the fancy indicators and AI tools out there, the fundamental mistakes we make as traders are always the same. In today's video, I want to expose the number 1 psychology trap that most traders never escape. But before we dive in, if you're new here, welcome to the community. We talk all things trading and investing to help you make smarter decisions with your money. So if that sounds interesting, hit the subscribe button. Let's get right into it. So let's define the problem. What's the number 1 psychology mistake that traders keep making over and over again? I'll tell you, it's this. The average trader jumps into a setup too early, panics when the trade goes red, and exits way too soon when it finally turns green. Sound familiar? That's not bad strategy. That's bad psychology. Think about it. You enter a trade because you see a nice-looking chart pattern or an entry trigger you've been taught to watch out for. You set your stop loss, which in theory should limit your downside risk. But then something interesting happens. Price starts moving against you. Even though you have a stop loss in place, you panic. You feel the urge to cut your losses, and that's when you start questioning your strategy, your entry, your entire approach. Doubt creeps in, and you find yourself exiting the trade. Now, sometimes you might be right to exit, but often you're just giving in to the fear of losing. Then, on the flip side, you could also be exiting winning trades too early. Not because the trade is going bad, but because you're scared to let the profit run. You want to secure what you have and book the win. Bad psychology. The normal trader follows the crowd, chases pumps, gets wrecked by FOMO, and lets fear dictate every move. And guess what? The market loves to punish the herd. So let's shift the frame. How do top traders respond differently? It's simple yet powerful. Where others panic, they stay calm. Where others hesitate, they execute. Where most people think in terms of winning now, they think in terms of consistency over time. It's not about being smarter, it's about being different. Emotionally. Here's a quick example. Normal trader sees a breakout, enters late, price pulls back, panic sells at a loss. Psychological trader waits for confirmation, enters with a stop loss, sticks to the plan regardless of emotion, rides the trade out, takes the win. One is reacting, the other is responding. And that makes all the difference. For me, everything changed when I stopped trying to win every trade and started trying to follow every rule. That mindset shift alone saved my account. And I know some of you may be thinking, yeah, easy for you to say, but how do I actually do that? And that's exactly what we're going to cover in the next video of this series. I'll be breaking down the specific habits that helped me stay consistent. But before we go, let's take a moment to appreciate why trading psychology is so crucial. You see, we're not just trying to beat the market, we're trying to beat ourselves. Our own minds can be our greatest enemy and our worst critic, but it can also be our greatest ally, driving us to success when we learn to master our emotions. And remember, consistency over time is what truly builds wealth. Don't get caught up in the daily fluctuations. Stay focused on your strategy and let your emotions take a backseat. I hope this video has been helpful. If it has, please give it a thumbs up. It really helps support the channel. Also, let me know in the comments, what's the biggest psychology challenge you face in trading? We're all in this together, and your struggles are valid. Your voice matters. So don't hesitate to share your thoughts. This is the first part of a new series on trading psychology. In each video, I'll be sharing strategies and habits that have helped me stay consistent. So make sure to subscribe and turn on notifications so you don't miss it. Thanks for watching. See you next time. Today we're diving deep into the 5 mental habits that consistently profitable traders use every single day. In part 1 of our trading psychology series, I showed you why your everyday thinking makes you an everyday trader. It's keeping you from making real money in the markets. Today, I am going to show you the 5 mental habits that profitable traders use every day to keep winning. And I'm going to show you how to start training them today. First things first, let's set the frame for today. Here's the truth no one tells beginners. Trading is 80% mindset, 20% execution. You can copy someone's strategy to the letter, but if your mindset isn't built for risk, pressure, and uncertainty, you'll still blow up. Your greed, fear, impatience, arrogance, and revenge will destroy you before a winning strategy ever could. So let's get into the 5 psychological traits I see in every successful trader I've ever studied, and how you can train them. 1. Detach from the outcome. The most important thing a beginner trader learns is how to detach from the outcome. You can have the best strategy in the world, but if you're chasing the win, you're not going to be profitable. Winning traders focus on executing the plan, not chasing the win. The goal isn't to be right every time, it's to be consistent over time. How do we get there? We start with one trade at a time. I call this detached decision-making. Every decision should be made based on your rules, not based on emotion. Ask yourself, are you reacting or responding? A reaction is a response to emotion. A response is a choice you make after careful thought. Which one do you think helps you win more trades? Dois, embrace boredom. Great trading is boring. Waiting. Watching. Not chasing every move. If your trading is always exciting, it's probably expensive. As a beginner, you'll find yourself glued to the charts. You're constantly looking for an edge, constantly trying to improve your strategy. But the best traders I know spend 90% of their time analyzing data, not watching the charts. It's where the real money is made, not in the action, but in the reaction. How do we embrace boredom? We accept the suck. Learn to love the boring parts of trading. Stop chasing the highs and focus on what's in front of you. 3. Expect to lose. Losses are part of the game. If you're expecting to win, you're setting yourself up for failure. The best traders I know expect to lose. They don't take it personally. They manage risk so that no single loss ever defines them. When you expect to lose, you're able to stay calm and focused. How do we expect to lose? We stop taking losses personally. We manage our risk so no single loss can hurt us, financially or emotionally. 4. Patience over perfection. Most retail traders overtrade. The best traders I know sit out 90% of the time. They wait for the perfect setup, and they strike when the odds are stacked in their favor. Impatience is the enemy of great trading. It keeps us from finding success. How do we find patience? We focus on quality over quantity. We take fewer trades, but we prepare better for each one. We learn to say no more often. 5. Data over drama. Best traders I know. They journal, they review, they track stats. They don't trust their feelings, they trust the numbers. They know that the market is a battle between bulls and bears, buyers and sellers, and they fight in the arena every day. How do we go from drama to data? We start tracking our trades. We review our performance. We look at our stats and we make adjustments based on the numbers. I hope this gives you some insight into the world of professional trading. Remember, you don't need a perfect strategy to win in the markets. You need a stronger mind. In part 3 of our trading psychology series, I'll share with you exactly how to train your mind to become a top trader. See you soon. These 5 habits won't form overnight, but if you work on just one each week, journaling, patience, emotional control, your trading will change in ways no indicator ever could. If any of these habits hit home for you, let me know in the comments. What mindset challenge are you working on right now? Like, comment, subscribe. Hey there, welcome back to the channel. Trading Psychology Series, Part 3. So are you tired of letting your emotions get the best of you in the markets? Do you find yourself constantly battling between greed, fear, hope, and despair? Well, if you're ready to take control of your trading psychology, then fasten your seatbelts, because today we dive in deep into how to train your mind for the markets. Get ready to unlock the secrets of becoming a disciplined, focused, and profitable trader. I know you've heard all the mindset tips thrown around online, but let me tell you something. Building emotional control is like learning a new language. It requires practice, patience, and persistence. But hey, here's the good news. You don't need to figure it out alone. Today, I'm giving you a step-by-step routine to build mental strength like a pro trader. Most traders spend hours learning technical setups, chart patterns, and indicators, but invest almost zero time in developing emotional control. It's like training for a fight by only watching YouTube videos. To become a skilled fighter, you must train your mind and body. And that's exactly what we're going to do in this series. And remember, we're just getting started. So make sure to hit that subscribe button so you never miss an episode. Now let's dive into the 4-step daily routine that will transform your trading psychology. Step 1. Pre-market mental check-in. Before you look at a single chart or place a trade, take 5 minutes to connect with your inner trader. Ask yourself 2 questions. What's my emotional state today? Am I focused or distracted? Am I chasing or waiting? Take a moment to breathe deeply. Visualize yourself executing your plan without emotion, and remind yourself why you're in this game. Step 2. Affirm your trading rules. Keep your trading rules visible. Read them out loud every day. Let them become your mantra. I only trade high-probability setups. I use a stop-loss on every trade. I don't chase. I wait for confirmation. By affirming your rules, you're strengthening your commitment to a more disciplined and controlled approach to trading. Step 3. Use the 60-second reset rule. Whenever you feel fear, uncertainty, or doubt, FOMO, frustration, pull away from the chart. Set a 60-second timer. Focus on your breath, counting to 5. Inhale with your belly, not your chest. Exhale slowly. Ask yourself, am I trading the plan or my emotions? This simple pause can save your account and keep you focused on the long game. Step 4. End of day journaling. After each trading session, take 5 to 10 minutes to reflect. Write down the trades you took, the rules you followed or broke, the emotions that came up, and what you learned. This practice helps retrain your brain to think like a winner. Now, let's talk about why this works. You're not just training to win trades. You're training to think like a professional. This routine isn't about perfection. It's about consistency. Just like a gym workout builds your body, these mental reps build your discipline. And I know it may feel uncomfortable at first, but embracing the suck is part of the journey. So, stick to it. Make it your habit, and watch your trading psychology improve over time. And guess what? I've put this routine into a printable checklist you can use daily. The link is in the description. Stick to it for 30 days, and I promise you'll notice a shift in your mindset. Next up in Part 4, we'll tackle how to stay calm during losing streaks. Yes, even the pros have losing streaks, so don't miss out. Hit subscribe and drop a comment below with your biggest challenge in trading psychology. I'm here to help. And remember, you're not alone in this journey. We're all learning and growing together. Until next time, happy trading. This video is for those of you out there grinding hard but struggling with the mental game. We've all been there. Trading Psychology Part 4. staying calm when everything's going wrong. You enter a trade. Maybe it goes against you. Then another loss, then another one. And suddenly you're questioning yourself. Did I miss something? What's going on? Why am I losing? And if you're not careful, these thoughts can spiral. So here's a breakdown of how to stay calm and focused, even when it seems like everything's going wrong. Welcome back to the channel. Shrink your size. Even seasoned traders experience losing streaks. It's inevitable. But what sets winners apart is how they adapt. When you're in a drawdown, consider reducing your position size. Stick to smaller profits and avoid substantial losses. In essence, think about lowering the intensity from full contact to maybe like 50%. You want to keep trading, but at a reduced risk, kind of like an intensity level, so you're still in the game, but you're protecting yourself. This way you can regain your confidence and rebuild your edge. And remember, it's not about being reckless, it's about calculated resilience. 2. Journaling for clarity. When losses pile up, the mind can get noisy. There's a lot of self-blame, self-doubt, anger, and frustration. It's easy to get lost in the chaos, so here's where journaling can help. Writing things down helps quiet that noise. Log each trade. Write about what went wrong, how you felt, and most importantly, which rules were broken or followed. This practice creates awareness and gives you a sense of control over your emotions. And if you're new to journaling, here's a simple structure to get you started. Each day, write down 3 things. 3 things that happened, 3 things you feel, and 3 rules that were broken or followed. This can be a game changer. 3. Take a mental reset break. Sometimes when things go wrong, we tend to keep going, pushing harder, trying to fix it. But there's a better way. Step back and take a break. It could be 1 day, 2 days, whatever you need to reset. During this time, stay away from the charts and the markets. Don't try to fix things or analyze trades. Just relax and clear your mind. This isn't a sign of weakness. It's a strategic move to return with a sharper focus and a clear mind. A lot of traders ask me, how do I know when to take a break? My answer: trust your intuition. If you're feeling burnt out or overwhelmed, it's time for a mental reset. 4. Focus on process, not P&L. Judging your success solely by win or loss can be misleading. Instead, evaluate your performance based on how well you adhere to your trading rules and process. Did you stick to your plan? Did you take the right steps? That's what matters most. Amateurs often focus on the end result, the profit and loss, while professionals focus on the journey, the process. This mindset shift can make a huge difference, especially when things don't go your way. And there is an additional mindset tool that has been super helpful for me and many traders I've worked with. It's the next trade mindset. Here's how it works. After a losing streak, pretend you're starting over with trade number 1. Forget about the previous losses, the previous trades, and focus solely on the next trade. This way you approach each trade with a fresh perspective. You're not burdened by past mistakes. You're only focused on the now. I've compiled all of these tools and more into a free resource, the Trader Mindset Checklist PDF. It's designed to help you stay grounded and focused during tough times. Head to the link below to grab this valuable tool. Now, before we wrap up, here's a quick disclaimer. These tools are not a magic bullet. They won't instantly turn things around. They're part of a larger mental toolkit that you develop over time. Next up in Part 5, we will delve deeper into the mindset of risk-taking. We'll explore how to accept risk without fear and how top traders effectively manage their risk. Thank you for watching. Subscribe if you haven't already, and feel free to drop your comments and questions below. See you in the next video. The mindset of taking risk like a pro. Part 5. This part focuses on how successful traders handle risk. Not avoid it, but embrace it strategically. So, have you ever found yourself hesitating to take that big trade, holding back because you're afraid of what might go wrong? Well, today we're diving into the psychology of risk. Specifically, we're going to expose the risky beliefs that keep you from hitting your targets. In our previous video, we talked about the importance of embracing risk, and in this episode, we're going to dive deeper into how to take risk like a pro, delving into the mindset shifts that separate those who succeed from those who don't. Remember, great profits come from calculated risks, not reckless abandon. Let's get started. Are you still risking too little, too much, or not at all? In this video, we're going deep into the mindset of taking risk like a pro. The difference between a fearful trader and one who scales into opportunity with confidence. Now, most traders think risk is something to fear, but pros see it as opportunity. When managed right, the problem isn't risk. The problem is your relationship with it. What if, instead of fearing risk, you could learn to love it? Here's how the pros do it. Risk feels like danger when you don't have a plan. But with a plan, risk becomes a calculated tool. The pros flip the script on risk. They don't fear loss. They expect it. They don't chase outcomes. They control inputs. They don't size up randomly. They wait until they've earned the right to size up. Here's how to make the shift. First, risk equals payment for opportunity. To get what you don't have, you need to give something up. You can't make money without paying for the chance. Risk is the entry fee. You want reward, you pay with uncertainty. Second, risk size equals confidence in your edge. Pros don't size trades based on how good it feels. They do it based on their back-tested edge and market conditions. No emotion, just math. Don't gamble. Third, scaling up is earned, not gamble. You don't size up after a big win. You size up after a long stretch of disciplined, consistent performance. If your mindset and system are both solid, then you earn the right to go bigger. If not, you risk blowing your account. And fourth, your job is to take good risks, not avoid loss. Avoiding loss is a losing game. Your real job, take well-defined, high-quality risks over and over. The edge plays out over time. Let's recap. To take risk like a pro, stop risking nothing. Understand the price you pay for rewards. Base your risk size on your trading edge. Don't chase feelings. Scale up by performance, not wins. And take good risks. Avoid loss is for amateurs. Taking good risks is for winners. Now, if you're skeptical and thinking, how can I possibly trust this guy? That's fair. We didn't earn that trust. And more importantly, you don't need to trust us. You need to trust yourself. And we can help you get there. But before we move on, we have a challenge for you. If you struggle with fear, here's a drill to build your risk confidence muscle. Pick a dollar amount that feels uncomfortable, but won't wreck you. Trade that size for 10 trades exactly by the rules. Don't break your rules. Don't change your sizing. Just execute, then journal how it felt. Did the fear subside? Did your heart rate drop? Did you notice your breathing slowing down? Track your results. Did you perform better or worse than normal? Repeat this drill over and over. Every time you do, your risk tolerance expands a little more. This is how to build confidence, not in theory, but in practice. Now, once you've mastered this mindset, it's time to dive into the next crucial aspect of trading psychology. Because if you don't see yourself as a trader, you'll find ways to ensure you don't trade like one. In Part 6, we're going to explore how to solidify your identity as a successful trader. And we want you to be there for it. So hit subscribe and turn on notifications so you never miss an episode. Next video will appear here. Thanks for watching. Welcome to the 6th episode of our trading psychology series, Trading Identity. Becoming the trader you say you are. So many traders get stuck in this weird loop where they know what they need to do. They even do it for a while, then something changes. Maybe they have a big win, maybe a string of losses, and suddenly they're back to square one. It's frustrating, it's confusing, and most traders just chalk it up to another excuse for why they can't succeed. But I want you to hear me out on this. Ever follow your rules for a week, then blow it all in one random trade? That's not discipline, that's identity conflict. Today we're talking about trading identity and why your results always match who you subconsciously believe you are. You can have the best system, tools, and knowledge, but if your self-image doesn't match that of a professional trader, you'll sabotage success. Here's the truth. You will always trade in alignment with your identity, not your goals, not your plan. Your identity. Think about it. Why do some people effortlessly seem to achieve success in every area of their lives? What separates them from the rest of us? The answer: identity. Everyone you see has an identity, a belief about who they are, and your identity dictates your actions. Actions lead to results. Results bring you more of what you are. So here's the good news. You can change your results by changing who you believe you are. But we have to start with ourselves. Because, let's be real, most of us don't actually believe we're capable of sustained success. We all have limiting beliefs holding us back. Here are 3 quick signs that your trading identity is keeping you from success. 1. You make money, then give it back quickly. So you win a few trades, then lose them all back, plus some. This is called a breakout, and it happens when your identity struggles to contain your success. It's like your mind doesn't allow you to be a winner. You revert back to the default. 2. You follow rules only when you feel good. You meticulously follow your trading plan when you feel confident, but when doubt creeps in, so does the chaos. Discipline isn't about feeling good. It's about doing what's right. A true trader follows rules consistently, no matter how they feel. 3. You say you're a trader, but act like a gambler. You consider yourself a disciplined trader, but find yourself chasing losses or taking revenge trades. You talk the talk, but your actions scream gambler. You can't call yourself a trader and behave like one at the same time. Now, if you relate to any of these signs, you're ready for the antidote. These 3 tools will help align your identity with your desired outcome, and once you master them, there's nothing that can stop you. 1. Daily identity affirmation. Every morning, repeat these words out loud. I am a focused, disciplined trader. I follow my system. I grow through every trade. This isn't whoop. It's scientifically proven that the subconscious mind can be rewired through repetition. So, program your mind for success. 2. Act like your future self. Ask yourself, what would a 7-figure trader do right now? Would they revenge trade? Would they skip journaling? Behave as if you already are that person. Remember, action shapes identity. 3. Visual anchor routine. Before every session, close your eyes and visualize this. You executing your strategy flawlessly, walking away after a win or a loss with peace, being in total control of your process. Do this for 2 minutes. Repetition equals reinforcement. Now put it all together. For the next 7 days, I challenge you to live as the trader you want to become. Act, speak, trade, and journal like the trader you want to become. Don't fake it till you make it. You're not faking it, you're forming it. Be consistent, not perfect. In Part 7, we'll tackle emotional triggers, how to spot them, manage them, and trade around them. If you've ever blown up a day because of one bad trade, don't miss it. Subscribe, comment below. Who is your trading identity becoming? See you next time. Trading Psychology Part 7. You were having a solid day. Then one impulsive trade wrecked everything. That wasn't random. That was a trigger. Today we're breaking down emotional triggers. What they are, how to catch them, and how to stop them from blowing up your progress. First, what are emotional triggers? Triggers are events or thoughts that bypass logic and push you straight into reactive trading. They hijack your brain. You don't think, you feel, and then you act. Common trading triggers might be a sudden big loss, missing a perfect setup, or even watching other traders win while you're flat. The issue with triggers isn't that they cause one bad trade. They spiral into a series of bad trades. Revenge trading, overtrading, doubting your edge, and finally, emotional exhaustion. They quietly ruin your psych capital, even when you don't notice it. So, how do we manage triggers? Step 1. Identify your patterns. Start journaling. Not just the trade, but the moment before the trade. Ask yourself, what was I feeling? You'll spot recurring emotional setups. Step 2. Name the trigger. Put a name to it. FOMO after missing a breakout or frustration after 2 stopouts. Naming it weakens its power. You see it for what it is, not who you are. Step 3. Interrupt the pattern. Build a reset ritual. Stand up, deep breath, walk away for 90 seconds. That's your pattern breaker. Use it when emotion spikes. And step 4. Re-enter only when calm. Never re-enter a trade until your heart rate and mind are back to neutral. You want to trade from clarity, not chaos. To build your awareness, here's a simple exercise. For the next 5 days, keep a trigger tracker. What emotion came up? What caused it? Did I react or pause? What's a better move next time? This builds emotional awareness, and awareness is power. In Part 8, we're talking about something deadly to long-term success. Boredom. Yep, the silent killer. If you keep sabotaging good days just because nothing is happening, you'll want to watch this. Subscribe and comment below. What's your number 1 trigger in trading? Why you overtrade when nothing's happening? Trading Psychology Series, Part 8. The market's slow. You're watching, waiting, and suddenly you take a trade you know doesn't meet your criteria. Why? One word. Boredom. In this episode, we're exposing how boredom silently kills discipline, and how to protect your edge from it. Welcome back to the show. Here's the brutal truth about boredom. Traders think the biggest threat is fear or greed. Nope, it's boredom, because boredom tricks you into creating setups that don't exist. It leads to it erodes your patience and self-trust, and boredom doesn't feel dangerous. But here's the kicker. Boredom destroys careers. Here's what traders get wrong about boredom. You think boredom means something is wrong, but in trading, boredom is part of the job. The market doesn't owe you an A+ setup every day. In fact, it's the opposite. You're not supposed to be in the market all the time. You're supposed to wait until your edge appears, period. And that's boring. So boredom is testing your professionalism. It's not a signal to act. It's a test of your ability to do nothing. Here are 3 strategies to master boredom. 1. Reframe it as a skill test. Waiting isn't weakness. It's strength. Every time you choose not to take a bad trade, you're growing your edge. That's like leveling up in a game. So instead of seeing boredom as a problem, see it as a chance to flex your waiting muscles. Make it fun. Turn it into a game. For example, our team uses emojis to log their daily trades on a shared document. If they don't see their setup, they log a 0 for that day and leave a funny emoji. It's a friendly reminder that not trading is also trading. 2. Use boredom windows for high-value tasks. Instead of staring at price, build rituals that help you get better. Review past journal entries and log screenshots. Read your trading plan. Do breath work. Turn boredom into productivity. This is so important because trading is counterintuitive. There's no action button. Your phone isn't going to blow up with opportunities. Most days you won't even see a B+ setup, let alone an A+. What are you going to do? Complain to your trading buddies about the lack of opportunities? Waste time trying to force trades, or use the downtime to get better? The choice is yours. It's your edge, your responsibility. 3. Set a max trade limit per day. No more than 2 to 3 setups. If they don't show up, you don't trade. This is counterintuitive, because most people have an ICO in believe I didn't trade today bias. But here's the power of this approach. You're forcing yourself to accept that not trading is also trading. You're taking the emotion out of the equation. And when you're comfortable accepting 0 wins some days, you've leveled up. So let's put this to the test. We're launching a mini challenge. The 3 no-trade days. For the next 7 days, if you don't see your A setup, don't trade. Log it. Count it as a win. After 3 full no-trade days, you'll feel more confident in your discipline than you ever have before. Are you in? Prove it to yourself. Show yourself that you can beat boredom. Because here's the secret. Boredom doesn't have to be your enemy. It's only a problem if you let it. It's a test, a chance to level up, a sign that you're getting better. Now, if you make it to the end of this video, drop boredom in the comments. Let's see who the true A+ players are. In part 9, we're diving into the identity gap between your goals and habits. You say you want consistency, but do your actions reflect that? Let's close that gap in the next episode. Subscribe to join us. And remember, in the market, there are winners and there are losers. Don't be a loser. Be a winner. See you next time. Trading Psychology Series, Part 9. And you say you want consistency. You say you want to be a full-time trader, but your habits, they tell a different story. In this video, we're going deep into the identity gap. The invisible space between your trading goals and your daily actions. Most traders think the problem is their system or their strategy. But the real issue is this. Your goals are about who you want to be. Your habits reveal who you really are right now. That's the identity gap. And it silently sabotages performance. Here are some signs you're living in the gap. You say you're a disciplined trader, but you don't journal. You say you're focused, but check your phone between candles. You say you wait for setups, but keep forcing B trades. You say you're full-time material, but treat it like a hobby. This gap creates mental friction, self-doubt, and burnout. Because here's what happens when you try to live out of alignment. Your brain starts telling you things like, I can't believe I did that again. Or I knew I should have waited for a better entry. Those thoughts create emotions like frustration and hopelessness. And if left unresolved, they lead to burnout. So how do you get back in alignment? There are 3 steps. First, call it out. Write this on a page. Who I say I am, and then what I actually do. Then compare. If the gap feels uncomfortable, good. That's where the work begins. Next, choose one habit that matches your goal. Don't overhaul your life. Just install one aligned behavior. Example: if you want to be consistent, commit to journaling every session for the next 7 days. One habit is better than 10 intentions. Then 3, identity stacking. Every time you keep a promise to yourself, journal, wait, log, you stack evidence that you are the trader you say you are. That's how habits become identity, not with motivation, with repetition. Now let me give you a complete example. Let's say you want to be a disciplined trader who takes high-quality trades, and you decide to start with one habit: logging your trades. Here's how you'd apply the 3 steps. Step 1. Call it out. Write down who I say I am. A disciplined trader who logs every trade. And what I actually do. Right now I only log my winning trades. Then reflect on the difference. You might realize that logging every trade helps you learn from both wins and losses. Step 2. Choose the habit. Commit to logging every trade for the next 7 days. Make it visible. Put your logbook next to your monitor, or open a new document. Step 3. Every time you log a trade, no matter the outcome, you're stacking evidence that you are that disciplined trader. At the end of 7 days, ask yourself, do I feel more like that person now than I did a week ago? That's how we close the identity gap. One aligned act at a time, and we've got 9 more of these videos to take you through the complete process. Announcement. In part 10, the final episode, we're going to pull everything together and give you a complete trader mindset operating system. This will become your personal blueprint for emotional consistency, discipline, and long-term growth. So subscribe so you don't miss it, and while you're at it, comment below. What's one habit your ideal trading identity would do daily? We're building a community of aligned traders here. Let's keep each other accountable. Subscribe, like. Thanks for watching. Trading Psychology Part 10. Your mental edgy blueprint. You've learned about fear, discipline, boredom, identity. But how do you pull it all together? In this episode, I'm giving you your trader mindset operating system, a complete mental framework to trade with clarity, consistency, and confidence. Why do you need a mindset operating system? Systems create consistency, but most traders only build technical systems. They never install a mental system, a repeatable mindset process that can run through any market condition. Without one, you're trading on hope, fear, and guesswork. With one, you're centered, sharp, and adaptive, just like a pro. What are the 5 core functions of your mindset operating system? 1. Emotional awareness. Spotting fear, greed, and boredom before they take over. 2. Decision clarity. Knowing your edge, your rules, and your plan, and sticking to it. 3. Risk acceptance. Embracing loss as a cost of doing business, not a personal failure. 4. Discipline automation. Creating habits that make good decisions automatic. 5. Recovery plus reset. Knowing how to bounce back from a bad day without spiraling. Now let me show you how to install the mindset operating system. It runs on a daily routine with 3 checkpoints. Morning boot, mid-session, and post-session. Morning boot sequence. When you wake up, run this mini boot sequence to prime your mind for trading. First, visualize your A+ self trading flawlessly. See yourself enter, manage, and exit trades with precision. Next, read your trading rules and your risk plan. Remind yourself, I don't need to trade, I need to follow process. Then repeat this mantra, I am in control of my emotions. Trading is my canvas, and I will paint my masterpiece. Mid-session checkpoint. After an hour or 2 of trading, ask yourself, am I following my plan, or am I drifting? If you're feeling emotional, step back for 2 minutes and reset your mindset. Take a deep breath, reconnect with your purpose, and remind yourself why you're trading today. Post-session shutdown. When you're done for the day, log your trades and emotions. Score yourself on process, not P&L. Write one thing to improve tomorrow. Now let me show you the most powerful reframes to run when things go sideways. This is your reframe mantra. When things go wrong, say this. This is a test, not a threat. I grow from this. That's how professionals think. Now I have one final challenge for you. For the next 7 days, run the operating system. Follow the steps daily. Even if you don't see immediate results, on day 7, watch what changes. This wraps up part 10, and the first major arc of this series. From here, we're leveling up. In part 11 to 20, we'll go beyond survival and into mastery, building intuition, emotional capital, management, trade detachment, flow states, long-term mental resilience. We're just getting started. Subscribe, like, comment. Are you ready to install the Trader Mindset operating system? Comment below. Thanks for watching.